Hello, everyone. It's JJ at Microwave Futures with your weekend update for January the 18th. And we have a long weekend, so markets are closed on Monday with the inauguration and Martin Luther King Day. Just wanted to give you a quick rundown on what we can expect, how to plan for it. We have an interesting market where we had liquidation um, going into the end of the year. Not a huge one, but enough to flush out quite a bit of trapped long inventory over 6,100. And we kind of went back and forth in this 5,900 to uh, 60, 65 area. And then we had a further liquidation, 3 days down underneath 59.15. Longer term, this is the zone that we're in, 58.25 to 60.65. These are zones and levels that I came up with 5 years ago during COVID. And I've been expanding them ever since using my doubling method because basically markets are cost basis times two, times four, et cetera, et cetera. And so what we've done is we did a look above 60.66 and fail, which targets the bottom of the zone. Then we did a look below 58.25 and fail, which now targets the top of the zone. Here's the thing. We have a massive gap here from 59.05, 59.10, just down to 59.46. And then Friday, we had another gap here. This is the overnight from Thursday. So you have two gaps in the market. When a market gaps up, this is a short position. So what happens is market gaps up and nobody's willing to sell under these levels that day. Now, what usually happens when a market gaps up is the buying will run out. The traders who are long here will sell back down to cost basis. Okay. And a lot of people will short thinking that the gaps are going to fill. Obviously, that did not happen. So the market went sideways for 2 days. Those 2 days of price stability created buying. Of course, Friday before a long weekend is a great time to squeeze shorts because people who short the market generally don't really think about the most important thing. The most important thing when you're shorting a market is to be able to identify that sellers are competing and lowering price. Nobody even talks about this except in our room. They just use technical indicators and all sorts of mumbo jumbo. And I'm not knocking it, but they have no clue as to the business reason why their short is not working. The business reason is that the people and the participants who trade size have found that they're buyers. There's no reason to lower price. It's a market. There's no reason to lower price. Price is not going to go down because people aren't forced to sell at cheaper prices to capture the buying. Okay? You have to capture the demand if you're a size seller. Retail traders have never traded size, so they've never had to capture the demand. This is why everyone shorts in the hole and gets trapped. They're trapped here. They're trapped here going into the inauguration. So, what we're looking for next week, hard to tell. If we get over 60.65 and you're short, well, govern yourselves accordingly. All right. What would be great is a failure to take out 60.65 or look above and fail and come back down, which would allow the shorts to, you know, get some relief and fill that gap. Don't know how long it's going to take for that gap to fill. Only time will tell. That's the sort of longer range thing. The other thing that you should realize is when a market liquidates in the manner it does, then it bounces back up, liquidates further, bounces back up, liquidates further, and then it does this. What it's doing is it's taking a lot of speculative players who were long here and flushing them out in almost a washing machine type of mechanism. That's why the market rebounds very quickly. And if you'll watch my other video that I did on why markets actually never go lower, you'll be able to see that It's because the way they're structured. The way something is structured, much like the way a house is structured, will determine how it trades. So what we want to do is we want to be aware of these things, have trade setups that complement the business, that don't fight it. So Sunday night, right, market's going to open. We closed here at 60.32 half. Here are the upper stops. So if you are short and the market starts taking the upper stops, right, we have a little bit of inventory above us, right? So the price closed under where the inventory is. So hopefully we'll get a bit of a move back down. If we get that, you'll be looking at 60.29, 60.25, 60.17. Those will be your lower targets to the downside. And then, of course, the previous day low, which is down here at 60.13, right? And then, of course, we'd have the gap fill, which would be here, around 66,004 and change. Okay, this is the overnight that had the single prints. This is where the shorts are trapped, right here. That's the gap. That's the gap in the overnight. Okay, so that's what you want to look for going forward. Remember, Monday is a holiday, and RTH starts on Tuesday. I'll do another update on Tuesday to keep you guys informed on how these things are going. If you want to learn how to trade using common sense and trade with the flow of business, understand the business so you don't make just silly mistakes, come see us at Micro E Futures. We have a 7-day free trial. I guarantee in 7 days I'll teach you more than you'll learn in 10 years in any other trading room. I'm JJ. I hope you're having a wonderful weekend. Enjoy the inauguration. And thanks so much for listening. Have a great weekend, folks. Bye for now.